Entre Leaders Live. We are back here in New York City. Got a great show with Brits today, investor at BDMI. Before we get into the interview, we're going to give the mic over to Michael Mara and give a quick word to our sponsor partner, Entre, doing big things over there. Mike, you there?
Hey, Charlie, what's going on? How are you?
Doing well, man. Excited to do another great episode today with Brendan. Tell everybody what's going on at Entre. Give us a quick update before the show starts.
Yeah, for sure. Yeah, I'm super pumped about this interview too. I think I'm excited to hear Brandon's thoughts about the investing climate and everything. And yeah, so if you're watching online on one of our social platforms, we are streaming on a bunch of different sites right now. Obviously, Charlie's LinkedIn. We're out on Facebook, Twitter, and YouTube. Throughout the interview, if you have questions, feel free to drop them in the comments on whatever platform you're on. I'm going to be around, and I'm going to be, taking notes, and I'll be kind of taking the questions. And at the end, we'll do a Q&A with Brandon. So make sure you please ask questions throughout the interview. For those of you who don't know about Entre and everything that we're doing, we do a bunch of events for entrepreneurs. We're a social network. Leaders Live is kind of one of our partnerships that we do with Charlie, and we're all about helping and connecting entrepreneurs. So we just rolled out our app. It is available on mobile and web now. We just started rolling it out. We just cracked 1.2K users, hopefully million soon. But yeah, check it out. We have a bunch of cool entrepreneurs, investors, developers, freelancers on there already. It's kind of like our early access right now. We're going to be doing more of a public launch in August, and we'd love to have you on there. If there's anything that we can do to help you guys out, please feel free to reach out, and you can sign up for free at just joinentre.com. We do have a bunch of cool events coming up, a few more Leaders Live, episodes here in the next couple of weeks. We have a big pitch competition coming up, Black-led startups pitch competition. We're giving out $1,000 in cash plus thousands in prizes with Start Engine, Fourscore Law, and Ideamotive to help build your apps and software too. So we got a lot of cool stuff going on. And if you guys need help with anything, starting your businesses, growing your businesses, let us know. Reach out. We're here to help. And yeah, that's pretty much it. Thanks, Charlie. I'm looking forward to this. And let me know if there's any questions that you guys have. Drop them in the comments, and we'll do a Q&A at the end.
Yeah, and anybody who's watching, put your LinkedIn profile in the comments so people can connect with you. This is a networking event as well, so it will be helpful. Definitely ask some questions throughout this. We'll be doing the Q&A. Mike will be leading that up. And download the Entre app. Thanks, Mike.
See you guys. Thanks, Charlie.
Awesome. Just a little reason why we're doing the show before we bring in Brendan. Understand how industry leaders operate, CEOs, founders, and venture capital funds. Once we understand how they operate, then we hopefully can connect them with like-minded business leaders and then help them grow their business. So with that being said, let's bring in Brendan Brits, investor, BDMI. Welcome to the show.
Hey, Charlie. Thanks. Appreciate it.
Yeah, I'm excited about today. Thanks definitely for taking the time. You're doing a lot of great things. You're definitely getting promoted on the web. I think you just recently were named one of the top 20 key investors, financing, and influencers in the creator revolution, which is very cool. I think that's relevant to what we're doing and a lot of what the Entre Group is about.
Yeah, I appreciate that. And that came from a website called influence.co, which is doing a lot of really cool work in general around following the sort of influencer and creator economy. So that's worth checking out as well.
Yeah, definitely. Absolutely. Before we talk about BDMI, what you're doing, who you're investing in, what sectors and all that, let's give a little context how we got here. You were working at Needham and BDO Capital on the tech M&A side. Can you kind of walk us through, I guess, your early business experience, and then we'll get into BDMI and everything you're investing in?
Yeah, sure. So I came to VC through a pretty traditional finance route, which isn't always the way it has to work. In New York, I find it's common. It's more common in San Francisco just because of the base of finance talent. But studied finance in school, was pretty interested in just markets and financial analysis and all that. got a job in investment banking out of school at a firm called Needham Company, which for me was a really great experience because it was exposure to sort of growth technology and particularly within digital media and software markets. So we were advising clients through M&A processes, not the big sort of Twitter IPOs, but sort of, 9-figure M&A deals, which gave me a lot of fluency in sort of important areas that have become relevant to me in my current job, from market analyses to cap table math to running the due diligence process, all of that. So I was there for a few years. Decided I really was passionate about technology and early stage companies, and made my way over to BDMI. And so it's sort of a natural progression, kind of followed my interest in wanting to get closer to the story.
What was the biggest learning curve that, I guess kind of changed the tide there, like where you started to understand, coming out of school to jumping into the M&A? What was the biggest takeaway learning with those groups that helped you get to, where you are right now?
Yeah, I mean, I tell this to current college students that I speak to. I think my thesis at the time is held true and holds true for others, that it's one of the ways, but it is a great way to throw yourself right into the fire and get CEO, C-suite level exposure to pretty impressive companies, kind of as a freshly minted college graduate, and to be doing really important work for them at sort of a very pivotal time in that company's story and arc. So I was attracted to the job for that reason, and I think like I said, my feet were held to the fire, just to be a good sort of advisor and good sort of business strategic thinker, kind of early on. The differences are, so I got that exposure to high level thinking and kind of at the end of the company's life cycle, or end of the sort of private company life cycle, where they're coming up to an exit, they're going to be acquired by PE or strategic, and it is, again, very pivotal point. I really wanted to see more of the backstory though, so I was getting the end, but I wasn't getting the lead up.
No, I get it.
Yeah.
It's exciting. I mean, you're understanding you're getting the whole grasp of the entire business, and you're dealing with the actual people who are running it. So that's exciting. That's
and M&A banking is really sales, right? You're selling companies to acquirers. So though there's a lot of sort of hard finance that goes into it, I think the important skill that I came to realize was necessary in that job, and in any job that I expect to have in the future, is just like the ability to craft a good story around the truth of what's going on, and pitch it and convey the value to people who might want to take advantage of that value.
Right. Communicate and package up that story. I like that. So you come over to BDMI. You guys are focused on a lot of exciting things: next generation media, consumer brands, enterprise tech, fintech. Kind of give us a package of what's going on at BDMI, what you guys, the sectors you're focused on, and the size you're investing into.
Yeah, for sure. So the very highest level, BDMI is a corporate venture fund. So we're connected to Bertelsmann, which I'd be impressed if there were more than a handful of folks on the line here who know Bertelsmann well. But it's a German company. It's media focused, but it's diversified outside of media as well. But large in scale and larger than you might think. So it's 20 billion in revenue every year. It's 125,000 employees around the world. And though you maybe haven't heard of Bertelsmann or know the divisions that well, you've definitely interacted with Bertelsmann content. So, for example, we have our TV division produces the Idol franchise, produces Price is Right, X Factor, Young Pope, American Gods. Penguin Random House, which is one of the world's largest book publishers, falls under the Bertelsmann umbrella as well. We have a music group called BMG. We have a magazine division in Europe called Gruner & Jahr, which has dozens of different titles across lifestyle verticals, but also different countries and languages. So it's a pretty prolific media company. Each of those divisions are, number 1, 2, 3 in the world in what they do respectively, in their sort of what I'll call traditional media categories. Bertelsmann also has businesses outside of just media. So we have a big services group called Orvato. We have an education group that focuses on digital education. So think, after I graduate school and I want to learn skills in coding or digital marketing, we have assets in our education group that can help with that. And that's sort of the big high level context to the group, which I think helps frame what we do at BDMI. So we're a corporate venture fund, though I like to kind of say that we are both a mix of the best of both worlds of strategic VC and financial VC. So we are financially motivated solely. So we are not looking for ulterior strategic motives like being an M&A funnel for our parent company or hunting down the best business development deals with cool technology vendors. We invest in early stage startups to generate returns for our parent company, but also other investors around the table. And really with a sort of central thesis that Bertelsmann and the infrastructure behind us gives us a pretty strong competitive advantage. So that has helped frame all the categories of interest that you just mentioned. So media kind of is an obvious one, but enterprise technology, consumer brands, fintech. Happy to double click on the theses around those. But we kind of view each of those as being a place where Bertelsmann can give us as investors kind of an ability to make better decisions, do better due diligence. Once we have an investment, help find partnerships within our network. The list kind of goes on.
Yeah, and from what I understand, there's two funds, right? There's the early stage fund, and then there's the maiden fund. I guess my question is, what are you focusing on right now? Like, are you in the early stage fund? Are you in both? And what sectors personally are you involved with day to day?
So we're a small group at BDMI. We are 5 investment professionals and I think 8 total on the team. So everyone sort of does everything. So you're right. So we have 2 funds we invest out of. Our main fund is just sort of our nomenclature. We invest in Series A and Series B predominantly. And typically out of that fund, we like to lead rounds. We probably do that about half the time. The other half of the time we are writing, the second biggest check or the third biggest check into the round. But typically we like to lead and put down a term sheet and take a board seat and all of that. So our fund there is smaller, but certainly a lot of our capital is allocated there and our time is allocated there. We have a seed fund as well, as you noticed, where our strategy is slightly different. So we're typically coming in earlier in the company story than we would want to double down and be sort of the lead main investor. But we're excited about the space and the team, wanting to learn more, wanting to be useful, and sort of opening up a relationship with a sort of small check as part of a syndicate, with the hopes of growing with the company over time.
Yeah.
So to answer your question, my time is split between the two. Like I said, we think of our main fund as being our sort of bread and butter. So I spend, 75% of my time there, but 25% of my time sourcing, diligencing new sort of seed stage opportunities as well.
Right. So when you look at, a particular investment, a startup, or someone who reached out to you, what's that process look like? For, I guess, I don't know if it differs, it probably does differ from a seed, because you're doing seed to B, which is a pretty big range. But what is that process? You look at something and how do you qualify?
Yeah, great question. It is different, but sort of parallel, I guess. So at the later stages where we are sort of being the main, or looking to be sort of the main investor or one of the main investors, the process typically is, first meeting, make sure there's alignment, make sure it sort of makes sense on both sides. And then we get excited about doing work to understand the opportunity better. So if we meet the founders and decide there's, a good, we agree with the thesis, we think the business is exciting. Typically, we're looking for companies that already have quite a bit of traction at Series A and Series B. So not pre-product or pre-revenue or anything. So we look to see, all the charts go up and to the right. And once we sort of verify those initial things, we'll do some due diligence at that point, which is a combination of looking at financial models, looking at KPIs, and trends therein. We like to do customer calls, and again, part of our sort of advantage that we have as Bertelsmann is our network, both within the company, but also around in the media world. So we'll make a handful of calls to people that we know who can say, yes, this technology is something we've seen and we use it and we love it, or we don't know it, but it sounds really interesting and we'd love to dig in. Both of those are sort of meaningful indicators for us. And once we start getting excited, we sort of get the whole team on board. Like I said, we're a small group, so perhaps differently than some larger funds, we get all the partners to 100% buy in, and then put down a term sheet. So it's not anything too dissimilar than other sort of financial VCs. Again, speaking to our sort of financial VC makeup.
Yeah.
But yeah, I mean, at the later stage, it might take a few months,
Right.
just because of all the work that gets done. Just to answer the question on the earlier end, so we do a very similar process, but because we are not sort of lead investor candidates, it's more important. The first step is more important. So more that we want to get alignment on the company vision and the thesis, that we believe in the team and think they're strong and both good operators, but also good managers and investor relations people. And we do our work. We want to understand sort of the underpinning dynamics of the business, but typically because it's earlier in the story as well, there's not as much, we're not going through the details of OpEx in the same way that we would for a Series B company. And also we're not the lead investor. So we are usually, it's not always this way, but usually there's a term sheet in place and a round going on and the company's looking to syndicate. So we sort of have a, yes or no, do you want in on this round or not kind of situation versus let's talk about how we can sort of make this work for the two of us and talk about the right terms and stuff. So it's a bit of a different question you're answering, but sort of the process and the math you're doing mentally is similar.
Sure. So, I mean, you were talking about the team, looking at the team and looking at the traction. On the team side, like the qualities of a successful founder. I mean, what do you look at founders and like, what excites you about a certain founder? I mean, obviously we hear a lot about pattern recognition, someone who's maybe started something and actually, maybe sold it or built something special. But like for you, what is the qualities of a successful founder?
Yeah, that is a meaningful one. I'll say there's been a lot of good pushback, especially in recent times, about not relying on pattern recognition. So not relying on a network that's predominantly white and male, or relying on 4-time founders that are also predominantly white and male to make investments. Though I will say there's pattern recognition in sort of the impression that comes off of good founders, or sort of the preparedness or skill sets that come with founders. So some of the things that come to mind from your question are having sort of a differentiated take in the market that you're playing in, which usually comes with experience. So we love founders not necessarily that have been CEOs before, but have been heads of product in digital streaming solutions and now are thinking about sort of the next wave of streaming content or streaming technologies, right? Or, I was in marketing, but I noticed my marketing efforts in category X apply in an interesting way to Y, and I'm going to go here. So some sort of, why are you uniquely positioned there? And then the two adjectives I think that come forefront to my mind in terms of like initial impressions and what gives us confidence and excitement about founders are, one, having a really solid sense of your numbers, and not in a way that we're not asking every founder to be financially experienced people, or the number one guy on accounting or whatever. But we like the founders to be sharp on KPIs and know sort of what's going on underneath the hood. And it might sound obvious, but that's not always a given when we meet folks. And the second thing I would say is sort of a counterintuitive thing here, but like, humility, but also belief in what they're doing. So we don't like it when someone veers too much to one end or of the spectrum on either side. So we don't love people coming and say, we've got this idea and it's going to work and there's only one thing that's going to happen here. We love opening up conversations and riffing on ideas with founders and finding people who are sort of open to feedback, but also sharing their perspectives and having sort of firmly held beliefs as well. So somewhere in the middle of that spectrum of, I'm here to learn, but I'm also, I have a core set of beliefs that are going to sort of be the mast for my ship of the company.
And of course, you like the numbers aspect of it. I mean, you're a numbers guy, as right, accounting guy, so that makes sense.
Yeah, it's that. So I'm probably just a little bit biased on it, but also I'll say just the pattern recognition of what companies that have done well, companies that are sort of viewing KPIs as the North Star in their progression, tend to just sort of find their path better. So like there's all this talk about product market fit and the hustle that it takes to get there, and there's a lot of sort of soft skills that go into that. But like particularly even in consumer businesses, not knowing the KPIs of your company is going to be impossible to figure out if you have product market fit, right? If retention is low, if engagement is low, but your top line user base is going up, is that a good sign of product market fit or not? That could be debated, but it can only be debated once you can see what the reality is.
Yeah, that's interesting. And then also you mentioned the next wave and the next generation of what the products are coming out. When you look at that and apply it to your investment strategy with everything that's been going on with the pandemic, how is that adjusted and how has that changed from March, I guess you could say?
Yeah, that's a great question. It certainly has developed and evolved. I would say our core theses as a fund, we're already sort of thinking about the digitization of a lot of things that are happening out there. So in most cases, I would say it's sort of accelerated trends that we were excited about versus sort of shifting a focus. So we've sort of stuck to our main categories, though we are also looking for in when we are presented with new investment opportunities, we are thinking about what is the sort of post-COVID reality of the world this company plays in. And there have been sort of meaningful trends to behavior, right? Like I used an example earlier of sort of video streaming. Things like this and events like you guys are putting on were incredibly valuable in person, but people have been found ways to both build content and technology that helps it still be valuable digitally. The John Krasinski show, which name I'm blanking on, but I think showed that it's really not about sort of high production value. You don't need Jimmy Fallon in a studio every night. You can do it in his attic and it's still valuable. So there are sort of meaningful things that are evolving, but sort of the underneath core belief that we have as a firm, I would say, it's really about, particularly on the media side, I guess, production becoming more digital and distributed, and all these sort of barriers to entry, needing big fancy cameras and production people are limited. So that's sort of speaking to just one example, but we are thinking about it actively, though I think more as a sort of check the box on sort of an existing investment framework that we already had.
Sure, there's a lot changing. It's exciting times and scary times, but I guess you just got to kind of find your way. In I guess finding your way, talk about mentorship a lot. You're a mentor with iMentor. When you look at mentorship and an early founder or startup, like how would you advise someone to try to find that mentor? What type of tips do you give as a mentor?
So to find a mentor, and then also,
yeah, both aspects of it, right?
Yeah,
finding one, and what are some of the tips as a mentor yourself that you like to give?
Yeah, it's a great question. Starting with the first one, I guess. I think it's important to appreciate that mentorship can come from all angles. I guess speaking to my own personal experience, I've had mentors that are both quite senior to me and they're 30-year veterans of their industry, but also that are junior to me and younger than me and help me think about things in new ways. And I think even mentors that are outside of my industry that just kind of either keep me sort of rooted on a sort of personal values basis, or again, just help me get outside the box. And, someone who's couldn't even tell you what unicorn means might be someone who's good to help you think about like what you want to do in your career or what you might want to look for in new investments. So I think the sort of personal motto I've held for myself in recent years has just been find good mentors wherever you can find them. I think it is helpful to have someone who's sort of been there before you and can kind of guide the path. It's sometimes hard to find those people, but I would say just reach out and ask. I've not necessarily practiced that preaching super well in my career, but have on occasion, and it's I think you'd find people are typically amenable to it. And then the last thing I might say on that note would be prioritize for yourself just having people that you work for or with that you are excited to learn from and think are, 10 times better at what they do than what you are. Just so you're always learning just in the course of the day to day. I think that that's probably one of the more valuable things you can do career-wise in my mind.
I like that. I'd never really thought about it. You think of mentors as an older figure helping you out, who's been there, wise character, but you look at the younger generation who could do so much on the internet. That's an interesting way to put it.
Right.
And then going back to like you being a mentor, what is the number one thing that you like to share with the kids that you're mentoring?
Yeah. So specifically for iMentor, and just if anyone's interested, it's a really cool program. I think it's in a few different cities around the U.S., but definitely here in New York, it pairs you with a high school student, and you help them think about college preparation and sort of social emotional growth. In that scenario, I would probably say it's been most beneficial to try to maintain humility in having these conversations, because so many of the kids I grew up in a Boston suburb, so I don't know what it's like to grow up in New York City and go to school in New York City. It's also been quite a while since I've gone through the college process and all of that. So sort of co-learning together has been really a valuable way for us to build trust with each other. And then I guess in sort of my work life, when I've had people that I've had the opportunity to kind of share my own insights and sort of thinking on, I'd say it's the same thing. Like, don't ever assume you have it figured out. And I think people hear or see that mentality and are more responsive when you have things you do want to tell them. Yeah, I feel like that's sort of an important point. So offer your perspective and know that you have value to contribute, but as soon as you start prescribing things, and I think you're signing people up for failure. Just help them sort of think in new ways.
Well, it's almost like listening first and understanding what's going on, and then try to correlate it.
I mean, the cliche is, if you give a man a fish, or if you teach a man a fish, he'll be able to fish for the rest of his life or whatever. Like, I think that works in mentorship, where teach someone to think about the world in a different way, and they'll be able to continue that after you're not as close anymore.
Yeah, absolutely. As we're partnered with Entre, I just want to mention, definitely submit some questions in the comments. Mike will get to them in about 5 minutes or so. But Entre is a networking group, 40,000 strong, of entrepreneurs and startup founders. What type of ways do you network? How do you grow your thought process? Like your team of people, like putting people together, bouncing ideas off of each other, but like mostly the network itself. How do you network? I mean, we did one of the events. It's obviously great, but for you, how do you network? How do you follow up?
Yeah, it's a great question. Sorry if you can hear sirens in the background. I would say, and obviously it's something I think a lot of people are thinking about in particular right now, because you can't go out into the world and shake hands at a happy hour.
Sure.
Something exciting going on inside.
That's New York.
But I would say an important tip for networking, or skill for networking, is just to kind of know what you're good at when it comes to connecting with people. I don't think there are many people out there. I've known a handful, but not a ton, who are naturally good at like working in a room and shaking hands and meeting everyone and remembering every name and all of that, and following up. But I've found personally a lot of value in trying to form one-on-one connections. So maybe you do shake that hand at a happy hour, but then you follow up and you connect over a 30-minute coffee one-on-one. You don't get as large of you don't get the quantity, but you might get a deeper quality just by connecting separately and forming both a rapport between the two of you, but also having a deeper understanding of what the person might be looking for and also can contribute to you.
Yeah, I think it's obviously a little bit different world now. No, you're probably not shaking those hands, but something that something that I heard that was helpful is almost like setting up 15-minute calls. Try to really block it in there, and then kind of talk about the opportunities you're working on. Maybe follow up every 2 weeks or something like that. So that's a good way to follow up.
Yeah, I think so. There's sort of, I'm thinking about this out loud right now, but like there's maybe an inner circle of people that you know super well and can go to bat for you, and you catch up with regularly, and it's important to have that sort of quality of network, just that's really strong, and that grows slowly over time. But then there's also the quantity is important as well, and knowing that I have a connection here or there. Maybe I'm not following up every week, but keeping them sort of warm is important. But I don't think pursuing that at the expense of losing some of the sort of core group that you have, and the quality there is a great idea.
Yeah, the core is built over time, and it's not overnight. So I mean, that's the following up aspect of it, and showing that you're a person that can actually do things that you.
And I've found that it grows faster than you think it will. So, you know, you make a connection here, then you make a connection there, and all of a sudden those have multiplied into a few different things, and then you meet people who know each other, and there's like a cool new way to connect with people. After a while, it starts really perpetuating. So it's an important skill and an important like manual effort you have to put forward. And even sort of, I see this with people I work for and all that. That continues late into your career, but recognizing the benefit of sort of a virality of network kind of is a great thing as well.
Yeah, and it goes back to the beginning of our conversation, communicating actually what you're doing and what you're working.
Totally.
So that they understand that, and they can, obviously try to apply it. Before we get to the Q&A, I got one last pretty much question with the opportunities and collaboration aspect. What are you focused on right now that would potentially you'd be open to collaborating? I mean, and this is really to open it up to whoever's watching on LinkedIn, YouTube, or the Entre Network, so they understand that, hey, you're investing either in tech, digital media, or something like that, and maybe you take DEX, but something that potentially they could contact you and communicate with you, an opportunity.
Yeah, it's a great question. I would say definitely that. So we're always looking for new investment opportunities, and if you want to have a conversation around that, I'm more than willing. Even if you aren't thinking about fundraising now, but have a cool idea or a cool company in and around the spaces that we work in, to sort of echo myself and walk the walk. Like I love just trading ideas and hearing about what people are doing. And if you're willing to have a quick conversation on that, I'd love to trade notes. That's probably the main thing. I do miss the ability to just meet people sort of naturally out in the world, and sort of when there isn't an investment opportunity, still to learn about what's going on and trade notes there. So really, like my job as a VC and any VC's job is just to have a good finger on the pulse of innovation and where market trends are going. And again, anyone that's sort of in a relevant space for us in media or consumer brands, enterprise technology, always interested in trading those notes and comparing what we're seeing.
What's the best form of communication for those types of reach? I mean, is it like a DM on Twitter? Is it an email? Is it a LinkedIn message? Specific?
Yeah, that's a good question, and unfortunately, I think it's probably different for everybody. For me, it's email, kind of old-fashioned, but a very quick like, here's how we met, here's who I am, here's what I would love to sort of discuss, or how we might be able to work together. Like I do this when I'm reaching out on behalf of our portfolio companies for business development and all that. Here's the ask. Here's what we think a mutual connection is. Keeping it sort of succinct, but also having that detail is great. And then I try to respond to as many sort of those cold outreach emails as I can.
Is there a email for the company itself, like or should I directly email you?
You can directly email me. I mean, I'm happy to give it. It's just Brendan@BDMIFund.com.
Yep.
And I'm sure there's a way to find it online somewhere too. But.
Yeah, I'm just trying to get you some more inbound opportunities.
Yeah.
Help people out. Let's throw it over to Mike though with the questions. So if you got any other questions, we'll take probably 3 questions or so. I saw Nathan had a question, a few other questions. So, Mike, what are you seeing over here?
That was awesome. I really enjoyed this. I loved your points on mentoring and also networking too. I think we're at an interesting time, obviously, with networking right now, which is why we're trying to do all these virtual events and live streams, but also private events too, and give people an opportunity to meet each other, and then roll out the app to really connect people
It's great that you are. I think it's an important thing for the tech ecosystem.
Yeah, it's I think it's huge just for mental health as well, like just seeing other people and stuff. So I really appreciate you coming on. I think this was fantastic. Yeah, I think we have a question here from Nathan. I think it's pretty interesting too, because you're starting to see this more and more now, especially with maybe second time, third time founders and stuff, or people who have a great network, in the Valley and stuff. They're raising these huge rounds. They have made no money. They may have a little bit of, test flight users, or, maybe some pre-sales or waitlist stuff. What are you seeing, or do you have any advice for founders? Maybe if they're building something that needs a lot of investment for them to actually really develop it, or what is your advice for founders who maybe need capital to build what they really want, and their pre-revenue, but they really do need that funding, and there's not really a way for them to bootstrap it? What do you recommend for founders that are building these types of businesses?
Yeah, it's a great question. I would say to start, so as a fund, we don't typically invest pre-revenue, though we have. It's not something we that we do a lot. But it's an important question, because sometimes, as you mentioned, Michael, like bootstrapping to post-launch and post-revenue is not always feasible. So I would say, on the one hand, target investors that invest pre-revenue. So there's got to be a stage fit there, because it's different investors have different comfort levels. But perhaps even more importantly, target investors that know your space, because pre-revenue, you're really pitching a vision and a thesis. You're not pitching KPIs going up and to the right. So finding people who know what you're talking about, and maybe they agree with you, maybe they don't, but if they do, then they're going to be way more likely to sort of want to come in as an investor. So it's really targeting the right people to talk to. And the second thing I would say would be pretty clear about the path. So have this sort of great thesis and vision, but also say, and here's what we're going to accomplish in 1 month. Here's what we're going to accomplish in 3 months. Here's what we're going to accomplish in 12 months. And here's exactly how much money we need for each. Give the person you're talking to the confidence that you know what it takes to get there, and have done the homework, and it's just a little bit of money that you need to get the ball rolling. So that the preparedness on that end, I think, is really important.
Yeah, I think it's one of the things that I've learned now, talking to a lot of investors from our events, but also just like our investors in general too, is finding the people who are in your industry, and making sure you're not just like pitching an investor because they're an investor, but you're pitching an investor because they specialize in your industry too. And totally. You know what I mean? I think that have you kind of noticed that being a big part of why you guys are? I mean, obviously you're looking for certain companies to invest in, but do you see that as like, you see a bunch of pitches and you're like, why are you even wasting your time with me, instead of finding people who are more in your industry?
Yeah, I mean, I just mentioned I try to respond to every cold email I get, but sometimes I get like a biotech pitch, and it's just like, it's so far out of the scope that, if I get to it, I'll respond, but sometimes not. Yeah, and it's important. And like, I don't take for granted at all that not everyone is sort of comes into this with a big network, and for all the New York investors, and they'll call up their friends who invest in hardware or biotech just because they have them. Like, that's not most people's reality. But there are ways to figure out who the people are, right? So go on Twitter and follow investors and see what they're talking about and what they're interested in. Read blogs, talk to other entrepreneurial friends. Just do. There are ways to sort of to channel there.
Yeah, it kind of feeds right into this next question. If you could, and you gave some great tips right there, but maybe give one more, or like one more. Definitely do this when you're pitching investors, and definitely don't do this. Are there like some things that you've, obviously tell founders, or that you've seen, that you've invested in founders because they did or did not do certain things?
Yeah. I would say this is maybe echoing a point I made earlier, but definitely do have a really strong feel for the underlying numbers on your company. It's different when you're really early and maybe it's not as relevant, but again, I think it might come to surprise to the people in this group that I take a lot of pitches where product's been live for 6 months, but the founder doesn't have any idea how many sort of monthly users it has or something. So having sort of a firm grasp on that is really important. And it gives confidence to the investor that you are thinking about the business and caring about it and monitoring it very closely. So that's probably the do. The don't, I would say, is maybe, we, because we take enough pitches, we can tell when people are skirting the truth and embellishing. So don't try, like, don't push the boundaries on what you can do when you're trying to sell a big vision and your excitement about the company, because we can sometimes see through the weeds there. And it probably acts more as a turnoff than it would do to serve benefit. So you stand to lose more if you kind of are overly salesy.
Gotcha. And then I have a question here too about just the future of media, since you guys are focused on this. Like, I feel like everything has just changed so fast in these last 3-4 months. What are you seeing it from, like, that, and since that's one of the main industries that you guys focus on, like, what have you guys been seeing in the media space? I mean, obviously with the tech-enabled stuff, there's so much live streaming. There's so many virtual events, like all these virtual education. I mean, Zoom absolutely blew up. Like, do you guys see that playing into media? And how are you guys thinking about this for, like, the next couple of years now?
For sure. I mean, I would say the trend over the last few years has been advertising-based models that rely on high click numbers and high viewership numbers. Has sort of fallen from grace in terms of an area that investors are excited about. And really what people get excited about is direct-to-consumer monetization through subscription models or some other direct-to-consumer mechanism, which is usually undergirded by really strong content. So that is all to say, have a content offering as a media company that really resonates with your core audience. We're investors in a few companies that have subscription models, and they don't need 10 million viewers every month to make money. They only need sometimes a couple thousand, sometimes tens of thousands, sometimes a million subscribers to sort of build meaningful scale. And typically those companies have a content offering that particularly resonates with a small group of people. So for example, we have a company based out of Austin called Flow Sports, which is a consumer subscription company that broadcasts live sporting events, particularly for long tail sports that are underserved by other media companies. So think college wrestling, track and field. They have marching band and a bunch of different things. And they don't need 100,000 people tuning in to watch marching band. They only need, a subset of a large number that they can sell subscriptions to make it a really meaningful business for them. So I guess the trend that I'm skirting around there is COVID has, I think, in my mind, advanced and accelerated this trend of people are going to tune more into what they're excited about and be willing to pay for it. And whether that's, it just requires knowing your audience much better, right? And maybe your audience doesn't need HBO level production value. It can be two guys on a Zoom and talking about things they're interested in, or it can be a podcast, or it can be something else, right? It's just having a really strong sort of value prop to the consumer.
And also, like, whatever's being offered right now. I mean, there's not a lot going on. There's not a lot of content being created.
Right.
I'm paying $50 for a UFC. I've never bought UFC. I'm a UFC guy, I guess. I don't know, but that's just kind of goes with the content that's valuable and offered. As we wrap this up, I appreciate your time. Can you leave us off with your words to live by, personal mantra, or ethos that kind of gets you going?
Yeah. Two things come to mind. One is, and this is, I think, particularly relevant during COVID quarantines, but the most important thing in in life for me is just the people that I know and love. So like maintaining those bonds and treating those people well, I think is something I don't want to lose sight of. And professionally, the thing I was going to say is it always helps me to remember that everybody has a boss, and it just gives me some empathy when people are having bad days or, being aggressive or annoying. Just remembering that they have to respond to a boss at the end of the day as well. So
that's great. I got to get home to my boss, my wife. Again, thank you again for your time. It was great. I think I really enjoyed.
Thank you guys.
And we're going to wrap this up and definitely follow up with you some opportunities, and hopefully we could collaborate in the future.
Yeah, would love that. Would love that. Thanks again for the opportunity. Good to meet you guys and proxy the whole network.
Awesome. Thanks.
Cool. Take care.